My name is Ronnie Michael, certified public accountant, and this is the Personal Finance Playbook. Improve your finances, improve your life. The title of today's episode is BNPL, Buy Now, Pay Later, in more ways than one. If you've shopped online recently, you've almost certainly encountered those buy now, pay later options at checkout. Whether it's PayPal, Affirm, Klarna, or Afterpay, these services have exploded in popularity over the past few years. But what most consumers don't realize is that those convenient payment options are quietly creating a new debt crisis that's flying under the radar, especially for young people. Let's start with some eye opening statistics. According to a July 2025 study by the Financial Industry Regulatory Authority, nearly 25% of Americans have used a buy now, pay later service at least once in the past year. And more concerning is that 41% of users report missing at least one payment, which often triggers fees that compound the problem. Users belonging to Gen Z are particularly notable. 57% of users in this demographic have missed at least one payment in the past 12 months. So, what exactly is buy now, pay later? At its most basic level, buy now, pay later is a short term financing option that allows consumers to split a purchase into multiple installments, typically with no interest if everything is paid on time. For example, let's say you wanted to buy a $200 pair of shoes. With buy now, pay later, you can pay just $50 up front and then pay $50 every 2 weeks so that after 6 weeks in total, you have fully paid off the shoes. Sounds harmless enough, right? But here's where buy now, pay later differs from the most popular short term financing option, credit cards, and why it's so dangerous. With credit cards, you have a single statement that you receive every month that shows all your debt in one place. You can see your total balance, your minimum payment, and your due date all in one spot. But with buy now, pay later, a given merchant may not accept every buy now, pay later company. So one of your favorite merchants may accept only Klarna, while another favorite merchant may only accept Affirm. This fragments your debt across multiple platforms, making it incredibly easy to lose track of how much debt you actually owe. The real problem with buy now, pay later isn't the service itself, it's how it's marketed and how our brains process it. When you see pay $50 today and three more payments of $50, your brain registers the $50 as the cost of the item, not the full $200. It's a psychological trick that makes expensive purchases feel more affordable. Behavioral economists call this partitioning, and it's incredibly effective at getting people to spend more money than they otherwise would. Let me walk you through a real world example in which you miss a payment. Suppose you buy a $1,200 laptop using a buy now, pay later service with four equal installments. You pay $300 up front and then $300 every 2 weeks for the next 6 weeks. Seems manageable, but let's say for whatever reason you end up missing a payment and maybe even multiple payments. What buy now, pay later companies don't emphasize is what happens when this happens when you miss a payment. Most buy now, pay later services charge late fees of $5 to $10 per missed payment. And if you miss multiple payments, those fees can add up quickly. Worse, many services will send your debt to collections after just two missed payments, which can damage your credit score. Let's do the math on a worst case scenario. You missed two payments on that $1,200 laptop. At $750 per late fee, that's $15 total in late fees. Doesn't seem so bad, but let's get into it a bit more. But because you missed payments, the company might also charge you interest retroactively at, let's say, 25% APR. On $600 of unpaid balance, that's an additional $150 in interest. Suddenly, your $1,200 laptop now costs $1,365, a 14% increase that you probably didn't budget for. Maybe the most insidious aspect of buy now, pay later is that it normalizes debt for purchases that shouldn't require debt. Is it sensible to get a loan to buy a $50 t-shirt? Of course not. But with buy now, pay later, that $50 t-shirt becomes just a $12 50-cent down payment today with 3 more payments over the next 6 weeks. Make a down payment for a house, not a t-shirt. Buy now, pay later has become particularly problematic for younger consumers. A 2024 Federal Reserve report found that 63% of buy now, pay later users aged 18 to 29 have used the service for non essential purchases under $100. In most cases, clothing. These are the same demographic groups that already struggle with financial literacy and impulse control. Unlike credit cards, buy now, pay later services don't report positive payment history to credit bureaus, so you don't build credit by using them responsibly. On the other hand, they do report negative information when you miss payments, meaning that you only get the downside of credit reporting and you do not get the upside. This is something that is widely misunderstood. A September 2025 survey from LendingTree reports that 62% of buy now, pay later users mistakenly believe that making payments on time helps their credit score. So, what can you do to protect yourself from the buy now, pay later trap? Here's 3 practical tips. 1. Treat buy now, pay later exactly as you would a credit card. If you wouldn't put it on your credit card, don't put it on buy now, pay later. If you wouldn't be able to pay cash for it today, you can't afford it in installments either. 2. Track all your buy now, pay later debt in one place. Create a simple spreadsheet that shows every active buy now, pay later account, the total amount owed, payment due dates, and minimum payments. You may even want to set up reminders for those payment due dates. This visibility is crucial for avoiding the debt fragmentation problem. 3. Before using buy now, pay later, calculate the true cost, including potential late fees. Ask yourself, if I miss just one payment, how much more will this item cost me? Most people are shocked by how quickly small late fees can add up. The bottom line ultimately is this: there is no such thing as a free lunch. Buy now, pay later is not free money. It's debt disguised as convenience. It's lighting money on fire while thinking you're being financially savvy. If you need to break up a payment to afford something, that's a clear sign you can't afford it right now. Remember one of the harsh truths of personal finance. If you don't have the cash on hand in your bank account today to buy something outright, then you can't afford it. Plain and simple. What do you think? Does this apply to your life? Leave a comment below, and thanks for watching.